Good morning. I'm John Kosar of Asbury Research, and this is our weekly overview of our Keys to This Week product. It's a weekly research report that is available on the Interactive Brokers trading platform, and it's also available at our website at asburyresearch.com. What we do in Keys to This Week is we look at a lot of data over the weekend, hundreds of different charts and data series, and we find 10 that we think are the most important for that upcoming week, the most influential. For example, if the market's overbought, we may show an overbought indicator. If there's a certain spread that has an influence over the direction of the market, we'll focus on that. So we do a lot of filtering. We find 10 metrics that we think are the most influential, and we put them into this report. So this is kind of what you need to know to trade and invest in the stock market for this week. I want to scroll down to our matrix, and this is where we take our 10 keys and we organize them into near term, which is up top here, and intermediate term, which is across the bottom, positive, which is green, and negative, which is red, categories. And just by giving this a fast glance, you can see that most of these 10 keys are situated in the near-term negative category. And then if you look at the intermediate term, you can see they're not as populated, but there's more intermediate term positive entries than there are intermediate term negative ones. You can look at this very quickly and determine that most of the bias heading into this week is near-term negative. But over the intermediate term, our bias also favors the positive. So of these, we're looking at a number of different things: the 1-month rate of change, ETF asset flows, volatility that has to do with the VIX, corporate bond spreads, relative performance between two key ETFs, and also seasonality that occurs during September. Of these, well, let's do this. Here's all 10 of those keys organized in order of their importance with a sentence or two description of each. And then we go down to the charts, and we have charts for many of these. The chart that I want to look at with you today has to do with corporate bond spreads. You haven't heard very much in the financial news about corporate bond spreads because they've been narrowing. And generally speaking, when corporate bond spreads are narrowing, it means that the bond market is pricing in less creditor repayment risk for these high-yield bonds. But here's what's been going on lately, is the spread has been starting to widen. All of last week, it has actually widened up above its 21-day moving average. We use a 21-day moving average because that's a tactical time frame for us. As long as the spread continues to widen, it's likely to put a lid on where the S&P 500 can go in terms of higher over the near term. So this is one of, again, 10 different key indicators we are watching this week. If you'd like to see the whole report, feel free to contact us at asburyresearch.com. Or again, if you'd like to subscribe, there's information on how to do that on the Interactive Brokers platform. Thanks for listening. Have a great week.